Global debt bomb reaches over 250 trillion, or a quarter of a quadrillion dollars. This is the important update that we are bringing to you today. Yeah, it's just a really interesting story came out last week from the IIF. That's the Institute of International Finance, and they keep an eye on, as do we, they keep an eye on the global debt levels, and because we think it's a very important metric to keep an eye on, both the headline number of the global debt and also how that relates to the global GDP. So they do these reports on a quarterly basis, they update it, and the latest report showed that we have now reached $247 trillion, which is nearly a quarter of a quadrillion dollars. So, you know, we went from millions to billions, we went from 6 zeros to 9 zeros, and then we went from billions to trillions, 9 zeros to 12 zeros, and now we're talking about quadrillions, which is 15 zeros. So, yeah, needless to say, debt is just, it keeps increasing every single year. And the report showed that just in the last 10 years alone, it's gone up 150 trillion. So in 15 years. So that's roughly 10 trillion every single year. Even as I say it, I catch myself going, have I got the numbers right there? Because they are so monumental, you know. It doesn't, you almost think this can't be right, you know, because it's just they are so astronomical, you know. And so it's an important story. Debt led to the first financial crisis in 2007, 2008, and we were clearly warning that debt levels back then were quite unsustainable, and it was going to lead to a debt crisis. And the same thing is happening again. And the debt surge, it appeared to accelerate in Q1, which is quite worrying. And global debt rose by just 8 trillion alone in Q1. You know, so Trump is in power. Trump likes debt. He used debt in all of his companies. He bankrupted many of them, and the world is becoming more indebted by the day. And we're seeing it's not just emerging markets, it is emerging markets, but it's also major economies as well. Nearly all of them are seeing huge levels of debt at every strata of society. So it's at household level, consumer level, it's at business corporate level, it's at financial banking level, and it's at corporate level. So I actually, there's a great chart that we're going to, I'll just bring it up here. We're going to, just to look at the numbers briefly. I don't want to blind you with the numbers because they're so huge, you can get lost in them. But there's a chart that we will, when we put this video out, we'll put it in with it. It's a table, and it basically shows how the total global debt in 2003 was 99 trillion. By 2008, it was 177 trillion. By 2013, it was 209 trillion, and today it's at 247 trillion. So, and as I said, it's every single strata of society: household, non-financial, corporate, financial, banking, and indeed government. Every single one of these metrics has seen a sharp increase in the debt level. So people say, well, so what? GDP is increasing as well, therefore it doesn't matter in the context of GDP. But it's actually increasing. Just recently again, the debt to GDP ratio is actually increasing as well. It flatlined for a number of years, went up massively, obviously, from 2003 through to quite recently. During the more recent recovery, it began to flatline, but it's started going higher again, you know. So the global debt to GDP, it is now, where are we at? The share of world economy. Yes, it went from 250% of GDP in 2003 to nearly 320% today. So, and that's the vital context. So the debt by its nature is manageable unless it gets to huge levels, particularly vis-a-vis the debt servicing ability of individuals and nations. And today, the entire GDP of the entire planet, of the 7 billion people on this planet, and all the goods and services that we trade between ourselves, the total debt is more than 3 times that value, so it's up to over 320%. So it's completely unsustainable, and that which is not sustainable will not be sustained. We know that, and the question is when the problems from this come home to roost. So it's a quarter of a quadrillion. This is a word that you'll be hearing about soon in the media. The media are quite slow to cover it because I think if they did, people would quickly realize that we are far from out of the woods and that another financial crisis is coming. It's a question of when rather than if. But that debt, it doesn't even include all of the unfunded liabilities and indeed the massive pension liabilities across the Western world in particular. So the US alone has unfunded liabilities of between 100 trillion and 200 trillion for Social Security, Medicare, and Medicaid. So these are massive, massive liabilities and massive debts, and it's going to create another financial crisis. So it just speaks to the need to, be prudent, diversify, reduce debt, and don't buy into this permanent growth, permanent recovery narrative. Economies are cyclical. We've seen that throughout history and in more recent times. And we've had a recovery, and we've had a bit of recovery and some economic growth in recent years. But it is based on very, very shaky foundations indeed, a foundation of sand. And just diversify is the bottom line, and particularly be careful of paper assets, stocks, bonds, and indeed fiat currencies, because they're being debased in quite a big way, and these levels of debt throughout the Western world and throughout the world will impact risk assets such as stocks and bonds and indeed fiat currencies in the Western world. So I hope you enjoyed today's update. You can catch up with us and our breaking news and updates on GoldCore.com. You can sign up for there. You can subscribe to our podcasts and our award-winning research, and you can follow us on all the usual social media channels. I'm Mark O'Byrne, Research Director of GoldCore. Thanks for your time today.